outside of a 3-week period from late March to early April, home improvement spending has really consistently been stronger than this time last year. So it hasn't just been resilient, it's been really through the roof. And the US population has been stuck at home, so they are investing in that home. If you look at the monthly sales growth at Lowe's, for example, in their first quarter, which ran from February through April, you saw February up 5% year over year, March up 9%, April up 20%, and then they're seeing similarly strong trends in May. So
wow.
it keeps building on itself.
And as you said, a lot of this has accelerated since the CARES Act. Anecdotally, CNBC has a survey that said home improvement was one of the main things people wanted to do if they got relief money. So that certainly is helping. What happens when those funds run out and after people have, this is kind of pent up spending, if you will, once the improvements are made and things settle back down, what happens to the stocks? And I should note you have a buy on Lowe's, which has outperformed since the lows, and a neutral on Home Depot.
Yeah, so I would say, we thought that there was going to be some initial payback after the CARES Act benefit ran out, but what we've seen is that home improvement has actually continued to accelerate. Now, we are starting to see some deceleration in sales growth, although still very strong in states that are starting to reopen. So as people are going back to their places of business, they spend less time at home, which means that they have less time for those DIY home improvement projects. But you're still looking at very strong growth in the home improvement category, and we think that it actually could have legs. Like, home improvement could be a category that maintains some of that wallet share that has gone from categories like travel and dining to the home. And we think that consumers will, a large portion of the population will continue to work at home and will therefore want to keep investing in that home to make it a comfortable and functional place to entertain their kids and teach their kids, to work in a home office, and just in general spending a little bit more time at home.
Right.
And we also expect some staycations this year versus vacations. So, people may be investing a little more in their outdoor areas as well as indoor.
You did mention that as areas have reopened, the sales have started to decelerate a little bit. There's a longer-term trend, though, of people moving to the suburbs. Do you think that could be a tailwind for a couple of years, 1 year, a decade?
Yeah, absolutely. Especially when you look at the millennial generation, which has only just started to enter the housing market. So we think that that's a multi-year tailwind for home improvement, because you think about all of these young millennials who have been living in the city, have been, putting off the purchase of a home prior to generations before. And now, due to COVID-19, they've felt, stuck in these small spaces. They're now reconsidering how they think about, urban versus rural or suburban, and moving out to the suburbs rather than staying in cities, or, having more space rather than smaller spaces. So we think that all of this does benefit home improvement in the longer term. And this is post-COVID. This could last for multiple years. So we do think that this is actually a longer term tailwind that could continue.